All right, welcome. Today we're going to break down a really important program that, for some people, can be a powerful second chance. It's called the Voluntary Disclosures Program, or VDP for short. We're going to explore what it is, exactly how it works, and why it might just be the clear path forward you need to deal with past filing mistakes. Let's get right into it. You know that feeling, right? That sudden heart in your stomach, sinking feeling when you realize, oh no, I think I made a mistake on a past tax return. Maybe it was some income you forgot to report, or a deduction you claim that now you're not so sure about. It's a moment of dread that a lot more people have experienced than you'd think. And if that sounds familiar, trust me, you are not alone. These kinds of mistakes, whether they were a simple oversight or something you've been consciously putting off, are a massive source of stress. The constant worry about a potential audit, getting that dreaded letter in the mail, and facing some pretty significant financial penalties, well, that can really hang over your head. But here's the good news. There is a proactive, official way to fix this. So here's what we're going to cover in this explainer. First, we'll look at the common mistakes that get people into trouble. Then we'll introduce the VDP as a second chance. After that, we'll get into the nitty-gritty of eligibility and benefits, walk you through the actual application process, give you a serious reality check on the risks, and finally help you figure out if this is the right path for you. So let's kick things off with Section 1, a common costly mistake. It's really important to understand what's at stake when we talk about non-compliance. And these errors are surprisingly common. It could be something like unreported income. Let's say you did a freelance project on the side. You got paid maybe 10 grand for it, but the client never sent you a tax form. It's easy for that to just slip through the cracks when you're doing your taxes. Or for a small business owner, maybe you misclassified a family vacation as a business expense. That happens. It could also be incorrectly claimed deductions, or even more complicated stuff, like forgetting to file a specific form for a foreign bank account that had more than $10,000 in it at some point during the year. These aren't just obscure problems. This stuff happens all the time. Okay, so that's the problem. Now let's move on to Section 2, a second chance with the VDP. This is where we shift from worry to the solution, an official, government-sanctioned pathway to fix things. So what in the world is the Voluntary Disclosures Program? Well, at its heart, it's an official government program that allows you, the taxpayer, to proactively fix mistakes on old filings. And that word, proactive, is everything here. By coming forward first, before they come looking for you, you can often sidestep the most severe penalties and, in many cases, avoid potential prosecution. It's a structured, formal way to wipe the slate clean. Now, you might be asking, why would the government even offer a deal like this? Well, it's not just about being nice. The main goal is to promote what's called voluntary compliance. It's just way more efficient and cheaper for them than launching thousands of audits. By offering relief from those big penalties, it encourages people like you to come forward. It provides certainty for taxpayers and helps resolve old issues much more efficiently for everyone involved. All right, Section 3, eligibility and benefits. Now, this is where the rubber meets the road. Who can actually use this program and what's really in it for you? Okay, so for your disclosure to even be considered, you have to meet 4 key conditions, no exceptions. First, it has to be voluntary. This is the big one. You have to raise your hand before they tap you on the shoulder. If an audit has started or they've already contacted you about this specific issue, I'm sorry, but it's too late. Second, it must be complete. You can't just confess to one thing. You have to lay all your cards on the table for all the years in question. Third, a penalty has to be on the line. This program isn't for fixing a tiny math error that wouldn't have a penalty anyway. And fourth, it has to be timely, which in this case means the information you're correcting is for a filing that was due at least a year ago. And this quote right here, it just perfectly sums up the most important rule of the game. The key is to act before they find you. The program rewards proactive honesty. That urgency, that proactivity, that's what this entire program is built on. It's a deal, but it's only offered to the person who takes the first step. So what's the actual bottom line benefit here? Let's look at this chart. Without the VDP, in that first bar, you're looking at paying all the original taxes you owed, plus some pretty hefty non-compliance penalties and interest calculated on the whole shebang. It can snowball incredibly fast. Now, look at the second bar. With an accepted VDP application, you still have to pay the taxes you owed, that's non-negotiable, but you get relief from those crushing penalties. You'll generally just pay interest on the outstanding tax itself. The difference between those 2 bars, that penalty relief, is the massive financial win. Okay, this all probably brings us to the most practical question. How does this actually work? What do you do? Let's dive into Section 4, the application process with a step-by-step guide. I get it. This part can feel super intimidating. I mean, it's like you're willingly walking into the lion's den, right? But the thing to remember is that applying is a very structured, formal process. So let's walk through it together and demystify the whole thing. Let's get really detailed with an example. Let's talk about Alex, a freelance IT consultant. 2 years ago, business was crazy, and he ended up taking about $30,000 in cash payments from a bunch of smaller clients. He was so busy, he just forgot to enter it into his tax software. It happens. So step one for Alex is to gather all documents. He's got to go into his attic, dig up the old bank statements showing those cash deposits, find any invoices or emails that match up, and print out his original incorrect tax returns for both of those years. Step two is to calculate taxes owed. Now, this is the heavy lifting. Alex has to recalculate his real income for those years, figure out what his correct tax bracket should have been, and determine the extra tax he owed. Let's say it's about $7,000, plus all the interest that's built up on that amount. Honestly, this is the step where most people call a professional. Step three, complete the official form. He'll find the specific VDP application online and fill it out, clearly explaining what happened, unreported income, and detailing the exact amounts for each year. Step four, submit your application. He'll package up the completed form, his newly amended tax returns for those 2 years, and copies of all his supporting documents. And finally, step five, cooperate fully. A few months might go by, then an agent calls and says, "Hey, can you explain this deposit from May?" Alex has to be ready to answer clearly and honestly to keep the process moving. It's a journey, for sure, but every step is laid out. Okay, we've talked a lot about the upside, so now it's time for Section 5, the reality check. It is absolutely crucial to understand both the powerful benefits and the potential risks before you even think about starting this process. Let's take a really balanced look here. On the left, the benefits are huge. You get that penalty relief we talked about, and just as important, you get protection from criminal prosecution for the issue you disclosed. And of course, there's the incredible peace of mind. But on the right side, let's be real, you still owe all of the back taxes plus interest. Also, making a disclosure means your file will be scrutinized, so everything has to be accurate. And this is a big one, folks. This program is for mistakes and omissions. It does not cover cases of deliberate, willful tax evasion or fraud. That is a completely different ballgame. And finally, you will very likely need professional help, and that's an investment you need to be ready for. It's a powerful tool, but it is not a magic wand. And all of this leads us to our final section, number 6, and the big question, is disclosure right for you? Let's pull all of this together with some key takeaways and final thoughts. So if you're going to remember just a few things from our time today, let it be these. First, the VDP is an official, formal path, not some informal negotiation. Second, being proactive is everything. Acting first is what unlocks the door to eligibility. Third, the number one benefit is avoiding those potentially crippling penalties. Fourth, your disclosure has to be complete and totally honest, no holding back. And finally, remember, this is a path to get back into compliance. It is not a tax amnesty. You are still going to pay the tax you originally owed. At the end of the day, the goal of this entire program is about more than just money. It's about bringing you back into good standing with the system and giving you a clear, certain path forward, totally free from the stress and worry of those past errors. So I'll just leave you with this final question to think about. When you strip away all the numbers, the penalties, and the interest calculations, what is the real value of resolving your past and finally securing your financial peace of mind?